Looking at markets now, and harvest for Nebraska soybeans has been complete for a couple weeks now. As for corn, the latest USDA crop progress report has corn harvested at 96%, near the 99% from last year and the 5-year average. All that while corn basis remains hot, and the increase in corn demand has been on the upswing too. I was joined by Tredas's Doug Simon on Wednesday to get his take.
Numbers we're getting from USA, we're going to see final numbers in January when they come out with that report. I was up by Wahoo yesterday, and there's one person I saw picking corn, but for the most part, Nebraska's done on soybeans. There's a little bit left to be picked, maybe out west in some different areas, but when you look at the national numbers, there's still quite a bit of corn, probably about 66% completed up in Michigan, Wisconsin, but South Dakota and North Dakota, there's still quite a bit of corn to come out there. There's about, I think, 1.2 billion bushels that's left out in the field, and we're going to carry over 1.9 billion bushels. So there's still quite a bit of corn out there relative to what we're supposed to carry over. Beans were maybe 100 million that are left out in the field, and we're supposed to carry over 75 million bushels. So we're down to about maybe 25% of what we're going to carry over. So beans not as big a concern, but there's still a bit of corn up there, especially in North Dakota.
And I think you mentioned on the show a time or two, corn basis, it's hot.
It's still hot.
Yeah, so is it one of those?
To be hot.
Yeah, is it one of those things where we need to take advantage of these prices now, or hold off on it, wait to see if it gets better? What do you think?
I think we've had a pretty good run. When you look at historical movement and basis, let's start with beans. Beans were 75 under the Nove, and when there was 15 cents a carry to the Jan, that's basically a 90 under the Jan. Let's call it that. Bean basis has come into 35 under the Jan now currently. So we've improved 60 cents on bean basis. So our carryover is a half of what it was last year. We were up almost a billion. We're going to be a 475 million bushel carryover. So it would argue that our bean basis level should be better, but they've made a pretty dramatic run. And typically by that Thanksgiving to Christmas time frame, you do see a really good, as Roy Smith likes to call it, a dead cat bounce. And so we've had a nice bounce in the basis. Unfortunately, the futures have fallen off here in the same time frame, and part of that basis improvement is trying to draw beans out of the country. The other side of it, corn, we were in the 10 to 15 to 20 under basis levels up at Columbus at harvest time. There, we were just everybody's rolled from the D's contract to the March. There was anywhere from 10 cents a carry. There was up to 12, a few weeks ago. But when you look at the basis levels right now, they're 3 under the March. With that 12 cents a carry, that's basically a 9 over the D's. So we've had a pretty, good improvement in that basis level again, a good post-harvest bounce. So yeah, we're starting to move some, want to core out some of the tops of bins and move some corn here. The futures prices aren't very good. So the pre-harvest stuff that we sold earlier, whether we did hedge derives or hedges, we can lift those and lock that basis in and take advantage of it. The carries have started to tighten up in that D's to March on the corn. March to May, May to July, those things have tightened up, which is also an indication of this market is, not as well supplied as it would like to be, and it's trying to draw corn out through that basis, through those tightening spreads.
And then as we get into November, it looks like there was a little bit of an increase in corn demand. Why do you think that is?
Well, I think, when you look at last year, though, those numbers are not going to change a whole lot. I just think that, we've had better ethanol margins here. Like last year, 2018, our ethanol margins were pretty much negative through all the first part of the year. Since harvest, this first quarter of the marketing year, we've actually been, just at neutral or slightly or positive margins. In fact, they've improved here this last week. But so that's encouraging for the ethanol side of it. One interesting thing is like the cattle numbers. I was looking at that. We had cattle on feed last week, and we've got the largest cattle on feed numbers in 8 years. And we've got feed use, and when you look at that, it's actually flat from where it was 2 years ago. We're actually down 300 million bushels on feed use from last year. We went from 5.6 billion down to 5.3 billion. But we've had a 5% increase in red meat and poultry production over the last 2 years. There's something not jiving there for me, because we ought to be seeing higher feed demand, I think, as well. Last year you could see maybe feed demand was a little bit higher because of the, really cold conditions, and we had to feed a lot more feed to get the pounds of meat. But something not jiving in there. So when we look forward, we're going to have the WASDE report in January. There's a lot of pieces of this puzzle I think they're going to be trying to put together, because remember back in September we had that big drop in the stocks number. Well, they're also doing a stocks evaluation right now that will come out in the January report. They'll come up with their new supply and demand tables. They'll look at production and acres, come up with those numbers. So there's a lot of pieces that got to come together, but they still got to address why those stocks were lower in September, probably because that crop from 2018 was overstated, but also maybe they're underestimating feed demand. So there's a lot of pieces that have to come together. It's going to be interesting to see what that January report looks like, but we still kind of expect maybe they'll cut those yields maybe a bushel or two. Maybe those acres maybe will be down. Maybe there'll be some positive surprises in there.
Is there a certain report that before it comes out you're like, all right, this is the one I'm really excited for the year? How does that work?
Well, excitement or nervousness or
volatility.
When you have a January report that's got stocks numbers and S&Ds, and we've had a very wet year, and there's a lot of uncertainty and doubt about USDA's counting of acres and yields. Yeah, this will be the biggest. We thought maybe the October and November reports would be big, but this will definitely be a big one in that regard.